have a very important Tesla stock update to get into today, and boy, let me tell you what, the bulls and the bears are all gonna have something to talk about after this one. Tesla stock today traded over $2.5 billion worth of options. Now, this might not sound too crazy for anyone that does not follow Tesla option activity, but it's in fact 5 to 6 times higher than any normal day you see with Tesla. Now, the next 2 days are the last 2 days of fiscal year 2023. So this is telling you a lot about next year and Tesla stock. That is very exciting. The technicals are also sweet money on Tesla. Let's be honest there. Tesla, on a technical basis, looks too good to be true. But don't get too excited just yet. There are some things the bears can take away from this video as well. It really has to do with the broader markets more than it has to do with Tesla specifically. As I just said, tomorrow and Friday are the last 2 days of fiscal year 2023. So you are seeing a lot of money moving around. That's why we're going to take a look at SPY and QQQ option flows as well. And let me tell you right now, they are not nearly as bullish as Tesla's. Now, tomorrow, we're going to get very important economic data that comes out tomorrow morning. This data is seen as a leading indicator to what's going on currently in the economy. It's not a month or two delayed like the government data is. It is from last week, this specific data point that markets are going to pay close attention to. We also have a speech from Fed Jerome Powell tomorrow after the bell, and on Friday, we have more very important economic data. So the next 2 days are going to be highly volatile, but could be very bullish for Tesla stock specifically. We're going to go over this and much more here in this video, including a video clip from Ross Gerber. If you would like to make more money and to reach financial freedom as quickly as possible, or at the very least, stay up to date with everything going on in our markets every single day with a select specific focus on Tesla and Tesla stock, well, hit that subscribe button and let's go ahead and get into it. So I want to start with some of the option activity that we've seen today. Now, keep in mind what I said previously in the intro of this video. These select few days, really this whole week, but Thursday, Friday, even today, Wednesday, are very important because they are the last days of fiscal year 2023. So what that means is if you're a hedge fund or institutional investor, if you want to book some profits for your clients, you want to ring the register or hedge out your portfolio or just stay neutral, buy stock, sell stock, whatever you want to do with your portfolio, well, your fiscal year 2023 is coming to an end this Friday. A new year starts in 2024. So you get a lot of forward positioning in specific stocks, in indexes, these few days. That's why historically September tends to be a rough period for markets, especially the second half of September. It comes down to your fiscal year ending and a new one starting. And Tesla stock today was notable. You've seen 1,009 orders totaling $2.5 billion with a positive order value of 67%. Now, if I pull this option flow measurement, this reading of all of the option activity today, and I bring up the total value of $10 million trades or higher, they're basically all puts. Now, they're $100 million, $30 million, $15 million. You get the idea. They're very large. Well, they're targeting, a lot of them, the January 2024 expiration. So not too far down the line. A lot of them are 400 to the 450 puts. So a lot of them are just short-term hedging their portfolios, their positions. They're not necessarily taking a longer bullish or bearish stance on Tesla stock. So with that in mind, a lot of your 2024 positioning as a whole looks very bullish for Tesla stock. Now, this is in drastic comparison to the S&P or the NASDAQ. The NASDAQ had 2.44 million total puts that were bought today or traded today, and about 1.99 million calls. So the bearish option activity definitely shined through here with the NASDAQ. On the S&P, it looks even more dramatic, with puts totaling 7.63 million and calls totaling 4.66 million. So not very many bullish positions, and I think there's an ultimate reason for that. As you've seen today, the Russell 2000 massively outperformed, and the Russell 2000 has not outperformed the last 18 months or so. So what is really happening, and what you need to be watching for over the next day or two, is selling in your big tech names, your stocks that have seen a lot of profits, and see where that money moves around. Does it move into something like a Tesla that's still down over 40% from all-time highs, or does it continue to move into your small and mid-cap stocks? So that could have an effect on the broader indexes over the next 2 days. For an example, it wouldn't surprise me if the S&P and the NASDAQ were red, but single stocks like a Tesla were green, or your small and mid-cap stocks were green. You want to watch to see how the money is flowing in these last 2 days of fiscal year 2023. It's going to give you a lot of insight to positioning for next year, for the fiscal year 2024. You are also going to get some important economic data coming tomorrow morning. You are going to get the GDP growth rate quarter over quarter, the final numbers for Q2. You're actually expecting this number to go from 2% to 2.1%. If you get a downward revision here, if the number comes in at 1.8% or lower, that probably gives you a negative market reaction because it says, hey, maybe the economy is not as strong as we thought. But I think the most important data print that we are going to get tomorrow morning is actually the initial jobless claims for the week of September 23rd. You're expecting 215,000. Now, this is a forward-looking, or at least current data point. This is from last week. This is not a month or two delayed like your government reports. That's why a lot of the time when you actually go into a recession, well, the government says, hey, we started a recession 2-3 months ago. That's because government data is so lagged behind. So initial jobless claims can tell you, hey, how's the labor market doing last week? So if you see a spike here, that's not going to be great. The 4-week average for jobless claims is around 217,000. So you're right there with your 4-week average. If you do see a big jump, you want to see a big jump here, if you're a bear, to 260 plus thousand. Anything over 300,000, you get a lot of worries. And I'll tell you right now, it could happen because of the UAW strikes and the amount of people that have been getting laid off. That should start to add to some of these numbers and to make the labor market maybe a little weaker, or at least look a little bit weaker. Now, tomorrow morning at 9 o'clock in the morning, 30 minutes before the cash open does start, you get Fed Goolsbee that also does give you a speech. Now, at the same time, well, an hour later at 10 a.m., you're going to get pending home sales month over month and year over year, the Kansas Fed Manufacturing Index that comes out at 11 a.m., and the Kansas Fed Composite Index. Now, Fed Cook speaks at 1 p.m. And then you get Fed Jerome Powell that gives a speech at 4 p.m. It says 3 p.m. It's 1 hour behind. I'm Eastern Standard Time, so it's 4 p.m. And you just want to watch to see if anything changes. If there's a change of tone, a change in verbiage that is used, that's what the markets will pick up on. If it's the same old, I wouldn't expect a huge market reaction to that. And then tomorrow night, you're going to have a lot of data out of Japan. And Japan is the 3rd largest economy in the world. They are very important for global economic activity, global economic growth. So you're going to get the unemployment rate, job applications, CPI, you're going to get retail sales, industrial production, all of that data for Japan coming out tomorrow night around 8 p.m. So you want to watch futures tomorrow to see what that causes, or what kind of move that causes. And then on Friday, you're going to get the UK, the Eurozone inflation rate, year over year, month over month. Personal spending month over month. This is expected to decline quite a bit from 0.8% to 0.4%. Personal income month over month is expected to rise from 0.2% to 0.4%. And then you're going to get your CPI or PCE numbers, the Fed's preferred gauge of inflation, month over month and year over year coming out on Friday morning as well. So I think Friday is going to be the big day, but if you do get big changes in the data tomorrow morning, initial jobless claims and the GDP numbers for Q2, that could also be very important. The biggest problem we have had in our markets over the past really couple of weeks here is the soaring of the 10-year Treasury. Now, a couple different things are happening here. The 10-year Treasury yields are rising, so the long end of the curve is starting to believe the Fed and believe higher for longer. This is causing a steepening of the yield curve inversion, so it's starting to uninvert. Typically, this happens right before recession, so there is quite a bit of recession fears that are out there, but you're also seeing upwards pressure on oil, which is up right now another 0.5% after rising over 3.5% today. You are seeing some dramatic increases in oil over the past couple of months, from about $67 a barrel to $94 a barrel since 1945. This spike in oil, you've always seen a spike in oil before a recession. So there's a lot of recession fears right now. There's a lot of fears of interest rates continuing higher. That is competing for capital. So the higher interest rates go, the more money flows into bonds and out of stocks. But you're also getting an interesting situation happening here with the 60-40 rule. The 60-40 portfolio or 60-40 rule is something that a lot of investors that have been in the markets for a while know about, and it's essentially you take 60% of your portfolio, you put it in stocks, you take 40%, you put it in bonds. Now, the relationship between bonds and stocks works like this. Obviously, bonds are like dividend stocks. In terms of the yield stays the same, but the price of it fluctuates. So if you get bond yields rising, that means bond prices are falling. So your value of bonds is going down. Now, in good years for the economy, in theory, bonds should stay pretty flat, shouldn't really move all too much. Yield should not fluctuate violently, and stocks should do well, right? So stocks should outperform bonds just like they historically do, and you should have a positive return in your portfolio. Now, during years where stocks underperform, usually when the economy is doing poorly, so a lot of money floods into bonds, and you get this rush to safety. So your bonds should make up the slack when your stocks underperform, and your stocks should make up the slack when your bonds underperform. What you have seen recently, the last 18 months or so, is the 60-40 portfolio did not work well. So basically, everyone just sold everything, especially in 2022. Bond values dropped dramatically, stock prices dropped dramatically. That should normally not happen, meaning there was really no flight to safety in the bond market. A lot of that was because the Fed was raising rates, but you're also seeing that happen now. So bonds, if you look at TLT here, bonds have been falling, whereas stocks have also been falling recently. You want to worry a little bit more if bond prices start to go higher. So have TLT pulled up on your computer. Have it pulled up on your phone or whatever you trade on. If this chart starts to rise and bond yields start to fall as the markets fall, then you have a big problem, because then investors are selling stocks and they are buying bonds. Right now, investors are selling stocks, they're selling bonds. If bonds catch a bid and bonds start to do well, that's where you have an even bigger problem. That's where you start to get into recessions. If we start to actually head into a recession, or the bond market starts to believe we are heading into a recession, you will actually see bond prices rise because investors will buy those bonds. You want to be watching for that. And you want to be watching for those days where markets are red and bonds are rising. That would mean, if you're looking at the 10-year Treasury, that would be bond yields falling on the 10-year Treasury and stocks falling as well. You don't want to see that if you're a bull in this market.
Now, well done. So there's what I think could potentially happen. If yields were to go lower, markedly lower from here, it's probably because something broke, and broke meaning the equity market, and you'd have this sort of perceived flight to quality in the form of the bond market. I don't think that's particularly healthy, but that's a scenario. Does that make sense to you?
Sure, but I think and that is how things have played out year over year for 40 years. When things get bad, bonds rally, but it usually happens after stocks fall. And I think the recent rally in bond yields, the rise in bond yields, the sell-off in bond, has not been felt yet by the equity multiple. So I think the next step before we get to the step you're talking about is for equity multiples to contract a little bit. You know, my sense is the same sort of move in equities that we have had. When you add on the move to bonds, equities need to catch up a little bit to the downside. My guess is around 5%.
So basically what he asked him on CNBC was this relationship that I previously just stated, where during times of fear, money goes into bonds. Now, basically what he said is, to the degree that bonds have fallen recently, the equity market has not played along, and just to catch up to the move that you have seen in the bond market, equities on an index level would still need to fall about 5%, and I do agree with that. Now, if you take kind of the mid-range of the day today, add a 5% drop to that, that would put the SPY back to almost 400. That would make some sense to me, and that should be to some degree expected, potentially over the next couple of days, weeks, or next couple of months. Really heading into 2024, that's what I do expect. I think the Fed is wrong here. I think you could be looking at emergency rate cuts. Now, those rate cuts are great, but emergency rate cuts are never a good thing. That means something broke, and that would mean downside for the market. So I do actually expect the economy to get worse from here, and I do think that could put more pressure on stocks as a whole. So today I did start scaling into Tesla again, and I did buy a couple other stocks as well. And if this selling does get worse, as I expect it will, then I will put more money into Tesla, into other stocks. But I want to keep some dry powder on the sideline for sure right now, over the next coming days, weeks, and months. Now, take a listen to this clip from Ross Gerber. He basically reiterates the same thing. He goes on to say that if you have a 1 or 2 month time horizon for Tesla, then maybe Tesla's not the investment for you, but he really does reiterate the long-term bullish thesis on Tesla. And he also goes on to talk how GM, Ford, Stellantis, legacy automakers are, quote, dying by the wayside.
And risk tolerance does one have to have for Tesla right now? I think the chart's fascinating over the last 3 years. We've got the downtrend off the highs, but the uptrend off the lows. By my armchair technical analysis, so Ross, it looks like we've got maybe a month before this thing's got to either break up or down. Which way you think it's going to go? I think I might already know the answer.
Well, I'm not going to tell you which way Tesla stock's going to go. I mean, I wish I knew that for sure. But, we work around valuations, and Tesla's still one of the highest valued stocks in the market based off its forward PE ratio. Tesla has a lot of things going for it, like the Cybertruck launch, and a great article today in the Wall Street Journal about how the mega packs have really stabilized the electrical grid this summer and helped Texas and California avoid blackouts, and all the utilities that are investing in Tesla energy battery systems, which are just revolutionary in our energy system. So I think long-term Tesla is an incredible investment. On the short-term, Tesla has these headwinds with higher rates, retooling the factory. So I think if your goal is 1 to 2 months, I don't know about Tesla, but I think if your goal is over the next 3 to 5 years, Tesla is as good of an investment as ever, and it's just a high-valued stock.
What do you think about the note from Deutsche Bank's analyst about them coming up shy, maybe a couple 100,000 on deliveries for the year?
I mean, I think it's a waste of energy. Tesla's going to deliver, 1.8 to 2 million cars. They're the dominant player in the EV space. And now with the Ford, plant on hold and, basically competitors sort of dying by the wayside here, Tesla's going to come out of this interest rate cycle in a stronger position than the other car companies, especially many of the EV competitors, which need capital. So the Fed is inadvertently helping, Tesla a lot in continuing its dominant position in the EV business. But worrying about a couple of 100,000 cars, this, that, this is a company that went from selling 100,000 cars a year 5 or 6 years ago to now almost 2 million and on track to, continue to grow at a 40-50% rate. So that's Tesla.
It's a fair point. And as far as Ford and GM go, I can't imagine that their situation doesn't help Tesla to some degree. Any read on the workers at Tesla? I mean, is there any risk that this bleeds over there at all?
No.
No?
Okay. No, look, I'm not a big fan of unions for many reasons. If you work at Tesla, you might get paid less in dollars, but you get stock options. And when the company performs and goes up 1,500% in 4 or 5 years, those employees did extremely well at Tesla. It's pay for performance. Now, if you're got the same pay at Ford, the problem is Ford stock hasn't gone anywhere ever. So, Ford union members aren't saying give us stock. They're saying give us cash, and that's the difference between a really exciting growth company and an old industrial company that's on the throes of, sort of the end of its existence. So why wouldn't the union just take stock? Well, they don't want it,
Yeah, okay. One other thing you did say there, which is that the competition dying by the wayside, and I'm thinking about Elon's comments about how the strikes could drive Ford and GM into bankruptcy. He said something similar about Rivian's cash flow. I know you're not a Rivian hater by any means, but they just put in a display Rivian outlet right across the street from Tesla here in the Gold Coast, Chicago. So it kind of seems like maybe the truck side, perhaps Tesla might be losing the edge a bit.
Well, we haven't had the Cybertruck come out, and that's
Right.
what I think they're really working really hard on, because people want Rivians here in LA. Rivians are selling very well in LA. Most Tesla owners are upgrading to Rivian trucks, if they want a truck, because they can't get a Cybertruck right now. And so we're seeing Rivian do very well. I do look at them as a competitor to Tesla on the truck side, but I think there's enough room for obviously both companies to be wildly successful. But I'm very bullish on Rivian as a product, as a company, and because Elon's alienated so many Tesla owners, many are looking for other EVs to buy, and Rivian's been the direct beneficiary of Elon's X adventure. So Rivian is spending a lot of money, but we expect our cash flow numbers to improve, or cash flow losses to improve over the next year dramatically as they scale production. So I'm not counting Rivian out. I'm looking at the stock very closely in here. I do think they need to raise capital maybe one more time, but boy, what a great brand and company Rivian is.
Okay. For Tesla going into the end of the year, Ross, where do you see its connection overall to the economy? Because it seems like that we are getting some optimistic signs, but then we also just went through a period of price cuts, so it seems like Tesla is vulnerable at all. How bad do things have to get for them to start slashing prices again? What does that relationship look like to you?
I mean, if they slash prices again, I'm just going to freak out, because it's like the lack of customer knowledge and understanding of the value proposition of the Model Y today is just amazing. And the fact that Tesla's done very little, they've done some advertising, but very little in aggressively courting new customers is really a huge mistake that Tesla's been making. And it's caused a lot of pain unnecessarily versus investing $20 or $30 million on an education campaign on television to teach people about EVs. But if you ask any young person who doesn't own an EV why they don't, you will hear ridiculous answers, So we've got to educate the public, because there's still, another 200 million vehicles on the road to replace with EVs just in the United States alone. So the market's massive, but nobody knows about it. And that's the problem. Nobody's on X in real life. That's a very small audience compared to the amount of people watching Monday Night Football.
Hey, some of them still can't afford it, though. To get the model they might want. Still might be an aspirational thing. But all right, I hear you. Thanks, Ross.
Now, I do want to go over the technicals here on Tesla, because what we've seen today was remarkably bullish. And the first thing that I want to point out, if you guys have not noticed it already, is this trend line from the lows. Look at that. Remarkable. Remarkable. You bounced exactly where you wanted to see a bounce today. Like literally to a dang T. You seen the bounce. Now, this also coincides with the 100-day moving average. You fell big time under that. At one point today in the video I made earlier, before that crazy end of the day bounce, Tesla stock was down almost 4%. You bounce from those lows to only be down 1.5%. But what you also did is you closed above the 100-day moving average. So in this range right here, where this line is from about 234 today to this 100-day moving average of 240, there was a lot of demand in that $6 zone that pushed Tesla back above that 100-day moving average. This is very strong. And this could be the start of a rise past $300 per share. If we extend this longer term downtrending line, if you start to break above about 265 again, that's your golden kind of range right here, you're probably in for much higher levels. This could coincide with the launch of the Cybertruck. I could very plausibly see that happening out into the future. This could come on maybe better than expected delivery numbers. Maybe that's a possibility, although that looks unlikely. But at this point, I think a lot of people are expecting a really low print for delivery numbers. So that could actually be a positive because, hey, Q4 should be a lot better than Q3. So you're almost certain to set a new all-time high for Q4. For whatever reason or another, Tesla stock on the technicals looks very bullish. Very, very bullish. When you mix that with the option activity, which looks very bullish today, and who knows what that's going to be for Thursday or Friday. Those are the most important days, especially Friday, as it is the last day for fiscal year 2023. But what I can say right now is you're more likely to trade higher than to trade lower from here. I think today was probably that day you were going to close above the 100-day moving average. Yeah, you seen Deutsche Bank come out and say Tesla might only grow deliveries next year by roughly 15% and come in at 2.1 million deliveries. If that news did not cause a close under the 100-day moving average, I doubt anything else will, unless we get really bad economic data and this recession starts to materialize a lot quicker than markets believe. If you go ahead and take a look at the S&P 500 chart as well, you're also getting a very clear bounce from the lows on this ascending line of support. Very, very clear. You bounce right at that level today. And obviously this chart is not perfect, but you bounce right there. You retrace back to the upside. This next level is going to be right here at about 428. If you can get above that, a bull run in this market looks a lot more likely. But again, it's all going to come down to the economic data. And unlike Tesla specifically, markets look a lot weaker on the SPY and the NASDAQ. You're under your 100-day moving average, whereas Tesla is not. Tesla closed above its 100-day moving average. So what's the bottom line here? It's simple. The next 2 days are the last 2 days of fiscal year 2023. So if hedge funds institutions want to book some gains, they want to sell some stock, they want to hedge their portfolio, or they want to buy some stock, well, a lot of that happens, especially on the sell side, the last 2 days of any fiscal year. That's why historically, the end of September tends to be really rough. So I wouldn't necessarily be betting for a huge rally over the next couple of days, but it is a possibility in certain stocks. A stock like Tesla is seeing some very positive inflows in the world of options. That tends to be a very good forward-leading indicator. You don't make money on options by buying calls after the stock has rallied. You make money on calls or options or puts, for that matter, by buying the option and then seeing the move. So they're very forward-looking instruments of derivative. So I think that is important to point out. Individual stocks can move a lot here in the next couple of days. Tesla looks very bullish. The indexes, though, I would be a little bit on the defensive side, calling this the bottom of this recent pullback. Now, the number one thing you guys need to know, and hopefully you take away from this video, is the estimates for GDP are very important here. We get the next GDP report on October 26th. The current estimate is like 3%. So any of this data we get tomorrow morning and we get on Friday are going to affect the estimates and the estimates could come down if that data is negative, and that could be negative for our markets as well. You also want to watch the bond market here. If yields continue to rise, that's not great for equity markets. But if you get yields falling on the 10-year Treasury on any given day, and you get stocks falling, well, that is really bad, because then you have a rush to safety in the bond market. That is something we have not seen in the past 18 months. And specifically now, that could mean maybe the Fed does start to cut rates. But after all, according to that expert in the bond market that you heard from that clip on CNBC today, stocks might need to fall another 5% or so just to catch up to the bond market. So that is the most likely outcome. Whether that happens in the next 2 days or that takes 2 months, that's a totally different question here. I do expect some degree of downside pressure on the indexes over the next couple of days. If that selling pressure does get even worse, that is a beautiful buying opportunity for Tesla stock. And I started buying Tesla here today, and I will continue to do so, especially if we get even larger downside. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns if you guys want to stay up to date with all of this information each and every single day. You guys enjoy the rest of your day. If you guys want to come trade with us live in real time every single day, link down below in the description of this video. Come hedge out your portfolio, come make some long trades, some YOLOs. We're doing a little bit of all of it. Link down below in the description of this video. That's it. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.